NIO stock is about to have a big week with earnings due on Tuesday, but is this a buying opportunity or is this the last chance to sell? In this video I will analyze NIO stock and give you my thoughts on what is happening right now and whether this is a good time to buy or sell NIO stock. What's up guys, and welcome back to the channel. In my last NIO video I said I expected the stock to jump about 20% in the coming week, and within 2 days NIO had jumped over 15%, and today I have another prediction for the coming week. Now NIO stock is going sideways, and I will explain why this is happening and why NIO is going to bounce back. Later in this video I will explain exactly what price I expect this to hit before the reversal starts, and I will look at what Goldman Sachs say is the way to tell if a stock will pop on earnings or not, so keep watching until the end and let me know if you agree with my analysis or not in the comments section below. I will try to answer one of the most important questions: when is the best time to buy NIO stock? Before we get into the video, I want to thank all you guys who have watched my recent videos. After taking a long break from YouTube, it's been good to hear from so many of you over the past 2 months. It really means a lot to me. Smashing the thumbs up costs absolutely nothing, but it helps the channel out so much. Can we get another 300 likes on this video? Please try help make it happen. And subscribe to the channel if you're new. I will be doing regular stock videos again for the rest of the year. Finally, I want to point out that I'm not a financial advisor. This is not financial advice. Now let's get straight into it. So the first thing that I want to mention here is that NIO sales have fallen again. NIO delivered just 8,132 cars in February, which is down 19% from January. Now this might not seem like such a huge issue if it was not for the fact that the January figures were already hugely down from NIO's 2023 Q4 sales and are also lower than the same period last year, but there are some reasons for this. We can see here that it has been a similar story for a lot of Chinese EV makers. Li Auto sales were down 21%, while XPeng sales were also down 44% from January. But NIO have the excuse for the decline. For NIO, potential customers' wait for updates for existing models may have also hurt deliveries. NIO announced on January 17th that it would begin deliveries of 2024 vehicles in early March, with discounts available for the purchase of 2023 models. NIO started accepting orders for 2024 models on February 22nd with upgraded vehicle specifications but unchanged prices. So this could be playing a big part in the NIO sales figures. After all, we did see something similar last spring, with NIO sales figures just before things improved and the stock rallied about 100%. Now we can see here that NIO had a fantastic end to 2023, recording the 2 best quarters in the company's history. So a big question now is, has this already been priced in? Or with NIO announcing their earnings report on Tuesday, will higher than expected deliveries boost NIO's Q4 earnings? So the Zacks consensus estimate for the quarter's loss per share and revenues is pegged at 51 cents and $2.29 billion respectively. Things to note ahead of Q4 results are the fact that NIO delivered 50,000 vehicles in Q4, beating the guided range of 47 to 49,000. Zacks forecast fourth quarter revenues from vehicle sales to be 15 million RMB, which is about $2.1 billion, implying growth of 2.2% on higher year-over-year deliveries. Our projection for another sales suggests year-over-year growth of 22%. Now Zacks do appear to be aiming much lower than Deutsche Bank analyst Edison Yu. Edison Yu's team regularly cover NIO stock, and they expect that NIO will report fourth quarter revenue of RMB 16.9 billion, assuming a sequential deterioration in average selling price due to model mix. Analysts in a Bloomberg survey currently expect 16.8 billion, which is about $2.36 billion. Now while Zacks have also noted that the higher revenue figures have also gone hand in hand with higher costs, it's worth remembering too that NIO also announced plans to cut 10% of its workforce in order to improve efficiency and reduce costs. Remember now that NIO will be releasing their earnings report on Tuesday morning, so let me know in the comments below what you were expecting to see in their earnings report. Comment earnings beat or earnings fail depending on what you think will happen. Now of course the most important factor of whether they beat expectations or not is what the analysts are actually expecting of the stock. 10 analysts have set a 12-month price target for NIO stock in the past 3 months. The average price target is $10, so the average price target is now more than 70% upside, but there is a low forecast here of only $5. Looking at market beat, we can see that NIO stock is currently at the bottom of both its 50-day range and 52-week range, and the market cap is now less than $10 billion, which makes this one of the largest EV companies in the world by valuation, just behind major players such as BYD and Tesla. Looking at the most recent price target set for NIO stock, we can see that JP Morgan has lowered their price target to just $5, down from $8.50. Now, although many analysts have been slashing their price targets for NIO over the past few months, this is the lowest price target I have ever seen for NIO stock. And this was set just over a week ago. So let's look at the bullish theory right now. NIO and its moment of truth. NIO has experienced a significant decline in its stock price. The company plans massive layoffs, which could lead to reduction in costs and potentially sooner than expected EBITDA break-even. And NIO has entered into partnerships to expand its battery swapping infrastructure and improve its profitability, but the market has largely ignored these positive developments. Now, this is an article on Seeking Alpha. I will just look at the most important parts of this, and if you want to read this for yourself, there is a link in the description below. You can read this article for free. Now, I'm skipping right down to what I consider to be important parts of this article. So despite strong growth from NIO in recent months, we have seen an increase in positive news alongside the negativity, which Wall Street has so far ignored, as seen by NIO's weak momentum at the moment. I think we will see increased volatility in NIO stock soon, and I think this volatility will be a positive for buyers. In late 2023, NIO announced plans to potentially cut up to 30% of its workforce as part of a major cost-cutting strategy. Now, the author of this piece sees this as a very bullish sign for NIO, and I have to agree. We have seen these cost-cutting strategies over the past 18 months across some of the world's largest companies. Profit margins have increased and stock prices have generally greatly increased too. So in NIO's case, the potential EBIT break-even should be closer than analysts expect today. Now remember that NIO spends so much money on R&D, and at some point this needed to be cut back. Like, NIO has expanded so much over the past 2 years that this was to be expected sooner or later. Then NIO has entered into partnerships with several companies with plans to construct more stations equipped with energy storage, charging, battery swap capabilities. Through such partnerships, the company is trying to reduce some of its R&D expenditure and increase the attractiveness of its cars by expanding the infrastructure. These factors should bear fruit in the long term, which have so far been ignored by the market. Then we have something that is both a positive and a negative. Massive dilution of sorts in the form of a strategic investment from Abu Dhabi, putting up $2.2 billion to take up its NIO ownership to 20%. Now, on a positive side, this, along with the other cost-saving measures, seriously helps the company from a liquidity point of view. But from the shareholder point of view, this could be seen as unwelcome dilution. But NIO has the lowest EV sales ratio in its peer group, although here we need to keep in mind that the company's deep unprofitability, which prevents us from even looking at EV EBITDA, let alone the PE ratio. NIO's next year sales growth is also one of the lowest in the group analysed, which explains the low valuation multiples. And this is something that I really have to look at from the negative point of view. This is something that will massively impact NIO's share price in the coming months. Now, this is an article on Seeking Alpha, but if you want to have a quick read of this, then I've also put a link to this in the description below. Also, check out the first link in the description below. If you are not already signed up to Seeking Alpha, you can sign up using my link and get up to 50% off your yearly subscription. At the moment, Seeking Alpha are giving a free 7-day trial, so check this out. If you don't like it, then cancel it within 7 days at no cost. Personally, I love the number of articles that are on here, which gives a lot of different perspectives on stocks. Check out Seeking Alpha using the link below. Looking at the charts, when we zoom all the way out over the past 5 years, we can see that NIO stock's current price has dropped to a level that has not been seen since mid-2020. In fact, the last time the stock was this low was during the run from early 2020, when the stock went from only $2 up to over $60 in 2021. But right now, NIO is trading sideways in this channel between 520 and 620. But an earnings beat and positive guidance could easily push this stock up above this, and if we get positive earnings, then I think that NIO stock is likely to bounce up and settle somewhere between $7 and $8 within the coming few days. Now, I consider this very possible. When we look at the data, like if the stock was to rise from $5.70 up to just $7.50, that would be a 32% gain, but the stock would still be well below the price it was at the beginning of the year and nearly 40% below the price it was 6 months ago. Now, as I said at the beginning of the video, Goldman Sachs says the share's performance going into an event could provide a valuable clue. Now, this is an old article from several years ago, but the points that it makes still rings true. And this is what Goldman have said on how to trade earnings. After performing a long-term study of pre- and post-earnings behavior, Goldman's options teams found that stocks that underperformed in the 2 weeks ahead of the event tended to have stronger positive reactions on earnings day. And NIO stock is down close to 10% in the past 2 weeks, so it will be very interesting to see how NIO stock performs on Monday. Let me know your thoughts in the comment section below. If you've watched all the way through and enjoyed my content, please hit the like button, it really helps the channel out. And if you're new, hit the subscribe button and bell notification. Follow me on Twitter if you would like to see another NIO update soon. Nothing in my videos is financial advice. I'm not a financial advisor. Thanks for watching, and I'll catch you in the next update.